Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla and let's go over the market and figure out what is happening to our poor Tesla. So with that being said, if you enjoyed the video, don't forget to hit that like button. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below if you're interested to join for $2.99 a month, where I essentially update Tesla, charts, extra thoughts, macro, and just overall my thoughts pretty much live throughout the day as the stock is moving. But moving right into it, Tesla closing down about 3.4% on the day, which will be putting us at about $225 per share compared to the market. Definitely another underperformance, unfortunately, for Tesla, as I believe I'm getting all mixed up now, but I believe this morning, for us at least, they announced that they reduced prices even further in China on the SNX, I believe. Or was that yesterday? I'm kind of getting them all confused now because they kept reducing prices over and over. But nonetheless, definitely showing weakness. However, the main question, or I guess thought here is, well, where the hell is the bottom? Like, where do we get this bounce, right? It's just been pain and suffering ever since earnings, really. I mean, ever since earnings, we've been just painfully suffering over and over and over, which shouldn't be too much of a surprise, right? I've been talking about how Tesla, when it rallies, it's going to rally pretty aggressively, but when it falls, it's going to fall pretty aggressively. And ever since we broke this red line that I've been talking about for quite some time, we've been on this downtrend, right? And, it has been pretty much a 25% drop since earnings, which is a fairly decent drop, right? Like that's, it's pretty sizable, but we're now officially in the 220s, right? This is the level, if you look back in my videos, like even weeks ago, this is the level I've been talking about for so long. Like the 220s has been like one of my main targets that I've been just waiting for and just constantly discussing, and we're finally here. So what does this mean? Is this the bottom? Can we finally bounce, or is there still more pain ahead? Well, personally, I think there's actually a little bit more pain ahead, but I definitely think it's looking a lot more favorable around these levels, and a little bit lower, of course, but especially compared to way up here in like the 260s, for instance, right? And it's looking a lot more favorable for the bulls, and it's looking definitely more attractive to continue buying shares at these levels. Now, going to strictly into technical analysis, you can see, right, we're still below, of course, the 21 EMA, we're below the 50-day moving average. However, with that being said, you can see this yellow line right here. I've also been talking about this back when we were still in the 260s, how I was going to play catch up, and I think that we'll probably meet it somewhere around the 220s. And that's exactly what's going to happen, it seems like, because it is currently literally at 219.94, pretty much 226 cents off of $220, and we're at 225, so we're very close to it, right? And I think I would not be surprised if tomorrow, especially in the morning, there's a bit of a fear, a bit of a panic, a little bit of a situation like that, where we do drop, we do continue falling even further. And I think how much more of a percent drop would this be from today's close? About another 2 to 2.5% drop, right? And it wouldn't surprise me whatsoever if we do retest this bad boy maybe tomorrow. Honestly, that really would not shock me, especially with such a hideous looking candle, right? Not the best looking candle here. They're definitely showing that the bulls are taking some control, decent volume as well, right? Not super high, but a little bit higher than at least the past few days, if you will, right? So it's on the higher end of the last few weeks. So with that being said, definitely not a good close, definitely a bit of a bearish looking candle. But with the 100-day moving average right below us, hopefully acting as a support, I definitely will be eyeballing that pretty aggressively, and I will be buying shares there as well, as I have today, this morning, and I will continue buying tomorrow as well, right? At the moment, I'm not really day trading the shares. I'm just kind of building the position right now, really, for a little bit more of a longer, like couple month swing trade, right? And I sell options in between, right? So I'm selling puts, I'm selling calls. So I just actually bought back my calls that I sold way ago at like a, I don't know, like 70 or 80% discount or something like that. But nonetheless, right? So that's what I'm looking for. That's the main thing. That's the most important thing to look for, in my opinion, right now. On top of that, we of course have the volume by price, right? We've been talking about this forever so long, talking about how if we snap this kind of 240-ish range, the volume gets pretty thin and will fall down just as fast as we rose up. And that's exactly what is happening once again, right? So we talk about these things in advance for these situations, that when it does come to fruition, when it's actually happening, hopefully you're not caught by surprise. But with that being said, not too far below us, pretty much right at the 100-day moving average, is where the volume, you can see, starts picking back up once again, as to hopefully acting as a support on top of that daily moving average right below us. So that's going to be the first focus I'll be looking at, right? And of course, we're also within that massive buy range, in my opinion, of the 220s. Now, with that being said, as I talked about, it's not looking super hot still. Even with that being said, even with the support down here, right at 220, in theory, of course, it could still break below that, right? Until Tesla shows some actual bottom signals, which it's not. you can in theory go even lower. Now, I personally would not also be surprised if we go to my second major price target, right? The first, of course, being the 220s, which I am buying the dip right now, but we also have the 210s, which is my second primary price target, which is, or no, secondary, I guess, price target, which is going to be right around this level you can see. So, way back when we were all the way, even over here, a lot of, price action happening within this level, right? Kind of the 210s roughly, right? We had a, support and resistance around that area. But more importantly, when we were on this little rally from back here, right, Tesla pretty much came up to about this 210 rough level right around here, and we got a massive rejection and kind of did it again right here, right? This was almost 210 as well. This was like 208. So naturally, right, as I always talk about, when you break through a certain, level, like a resistance or a support, it flips to the opposite. In this case, of course, this was obviously acting as a resistance, even over here too, right? Support and resistance, right? Now, of course, that we broke through it right here, naturally, this area right here should, in theory, act as a support now. So, and I always say, whenever you break through these major supports or resistances, it's very common to retest them. This, of course, was a very long-awaited retest, but we're not too far from it, right? Only, how much more is it from here? Into 210. It'll be another about 6.5% drop, which really isn't that much for Tesla. That can happen in even a day, really, right? 2 days easily, right? So it wouldn't surprise me if we also come down to around that 210 level-ish, give or take, to retest what used to be a pretty decent resistance to now, of course, acting as a support, which even further, of course, is amplified if you look over at the weekly. It's a little bit easier to perceive this, in my opinion, where, again, if we come down to 210, which is exactly where this white line is right here, right? That's where this, support was over here. That's where this, obviously, resistance was over here that I just talked about on the daily chart. And of course, that'll come down to retest that. That'll also be essentially a retest of the blue line, which was that trend that we did break above, that we got resisted several times. Then we finally broke above on this candle right here. That'll come back and retest that breakout. So we're going to be double retesting, almost like 2 breakouts, or essentially 2 old resistances now, in theory, turning into support. And as if that wasn't enough, of course, we will also have a retest essentially of the bottom of this channel, which is also around that 210. To me, the 210 is probably the most important level, roughly. Again, give or take, not exactly. It's not like if it goes to 209.99, it's all over, it's done. That's not how it works, but roughly 210. However, with that being said, our side is still pointing straight down, which isn't great. The MACD is looking potentially to cross over to the bearish side, which also isn't very good to see. And like I talked about before, and this is where it gets extremely bearish, where some people might be very upset to hear this, but this super duper bearish, which I don't think will happen, but it's very possible, right? I have extra cash in like a second account that is pretty much for like last resort, like, okay, if things get really bad, okay, then we pull out that cash, and we start buying the dip. But that's what this is, that's what that will be for, which is going to be this situation of having a massive bear flag, where essentially, in theory, this could be from the all-time highs I talked about before, from all-time highs all the way down to this level, 100 level that we just hit like a few months ago. This could be just one massive pull into one massive bear flag, which did get rejected at the 618 Fibonacci. If you go from this high over here to this low over here, this is the 618 Fibonacci. And in theory, it could be still possible that this is just a major bear flag. And if we break down below from this, which will essentially be a break of $210 to $200, right? That kind of range will be extremely important. But if we lose that, this is where things can start getting extremely ugly, like very, very bearish, and a horrific looking September coming up. So just keep that in mind. That would be extremely bad for the bulls, phenomenal for the bears. But as a bull myself, I am not going to ignore that possibility. I think it's very real. And that's why I do have, like I said, extra sideline cash ready for that kind of situation. But if this were to happen, and if we were to lose this and break below 210, 205, 200, somewhere like roughly in that kind of very low 200s range, and fall out of this essentially ascending channel, then that would mean that we're, at the very least, in my opinion, coming down to about the mid 100s, if not potentially even back to a very low 100s as well. And God forbid, lower than that, right? But that's kind of the main things I'll be looking at right there, ladies and gentlemen. Overall, of course, we also have this, descending wedge that unfortunately broke down to the bearish side, which doesn't usually happen, but of course, nothing in the market is guaranteed, like I always say. And in this case, this is a perfect example of that, where this is a bullish pattern. Didn't obviously play out in that sense, right? And we had a retest, came down, and we're still, of course, moving downwards. We have a gap over here at pretty much $221, and I believe we have some more gaps, if I'm not mistaken, somewhere around Actually, I don't think we have too many more gaps. I might be missing. I'll have to take a closer look, but this is the major gap that I'm definitely seeing for now. I know there's a lot more gaps way before if you look Tesla like years ago, but that's the main one I'll be looking at for now as well, which is also around that 220. So that's gonna be the first major level that I think we'll probably retest tomorrow and hold, hopefully. And if we fall, I do think the 210s roughly is next. And if we lose that, well, don't look at your account for a few months. I'm just gonna say that. Now, that's kind of the main thing I'm looking at. Let's take a quick look at options. Once again, we did look at options the other day. It was looking exceptionally bearish, and it's probably not a whole lot different, but let's double check just in case. Yeah, you can see still looking overall bearish. Looks like a little bit of bullish positions starting to trickle in over here compared to when we last looked at it, but still definitely a lot more bearish than bullish. No question about that whatsoever. But yeah, other than that, actually, I'll take one more look. We'll go over the weekly. We'll go over to, I think it was this one right here. Yeah, the TW pivot. It's still not really showing us any super obvious bottom signals as well, right? Nothing that screams like this is the bottom, like no questions asked. Yeah, so there's really not a whole lot really right now for Tesla that's going for that's really showing that it's gonna bottom just yet, other than the 220 and the potential 210 levels. So in my opinion, just watch for those, very important, and see how it reacts, and play accordingly to that as well. RSI is approaching overbought, or rather oversold territories. So we'll see how that actually reacts as well. But yeah, in my opinion, again, 220 followed by 210, most crucial levels to pay attention to and kind of, react accordingly. And if we lose 210 to 200, anywhere in that range, it's gonna be really bad. But yeah, thanks for watching. Let me know what you think down below, and I'll see you tomorrow. Peace.